Treasury Secretary Janet Yellen says the nation's banking system, quote, remains sound. She told lawmakers on the Senate Finance Committee today that Americans can feel confident about their deposits in the wake of the country's second largest bank collapse. Senators questioned Yellen about whether or not taxpayers would end up paying to make depositors at the failed banks whole. She assured them that that would not happen. Senator Mark Warner asked her about the impact of social media on this situation.
I think this will go down as the history's first internet-driven run. You have any initial thoughts on this?
Well, you know, no matter how strong capital and liquidity supervision are, if a bank has an overwhelming run that's spurred by social media or whatever so that it's seeing deposits flee at that pace, a bank can be put at danger of failing.
For more on this, Scott MacFarlane and Margaret Brennan join us now. Scott is a CBS News congressional correspondent, and Margaret is CBS News chief foreign affairs correspondent and the moderator of Face the Nation. Welcome to both of you. Scott, I'm going to start with you because you were up on the Hill for that hearing today. Clearly, the Treasury Secretary was looking to speak not only to senators, but to the wider financial community. What was the main message that she wanted the markets to know?
Nancy, both for the Treasury Secretary and Senate Democrats today, there were multiple tasks and multiple goals. One of them was, as a group collectively, to try to communicate that there's no risk to the community banks across the country, that there isn't a grave risk of contagion, that there aren't banks at risk of collapse. And we've actually seen members of both parties try to communicate that message over the past 48 to 72 hours, acting, if nothing else, as a cheerleader for the community banks across the country and trying to tamp down any fears or concern. That was one of the goals. Another goal from the Treasury Secretary, quite clearly, was to try to lean into this argument that what was done to save Silicon Valley Bank was to save depositors and to help those small businesses with money in the bank, and trying to push back against this claim. It was a bailout of speculators, of risky investors, trying to make that argument, but getting a lot of pushback from Republicans, one of whom said it was the taxpayers in small communities in Montana, where the banks are responsibly run, helping to, in essence, bail out a Silicon Valley Bank where things were done in a risky way. Those are some of the goals, but also they wanted to have it out today, Senate Democrats and Senate Republicans, over the 2018 deregulation of the banking industry, which both sides are arguing had different impacts in this current week. But I'll tell you this, without equivocation, Margaret and Nancy, there is a growing concern here about what happens moving forward. You can tell by the way this has knocked out some of the other issues from the conversations in the hallway, from the conversations in the hearing room. This is now a growing issue of focus for Congress.
Especially because it seems like we get a new major development every day. Margaret, this was the first time that the Treasury Secretary spoke publicly since she was speaking to you on Face the Nation this weekend. And it comes on the same day that we learn that 11 major banks are stepping in, putting $30 billion into First Republic Bank. This seems like a very unusual move, isn't it?
It is unusual. There was something that happened in the 90s with a hedge fund that was somewhat similar, but this is a really unusual statement by some of the nation's biggest banks, the systemically important ones, you know them as too big to fail, and others who've received government aid in the past, who instead said, as private industry, we're going to step in and shore up regional banks. Now, remember, the bank that they are putting money into, First Republic Bank, it has more than $200 billion in deposits. It's roughly the same size, more or less, than SVB. And what happened is something we talked about Secretary Yellen about on Sunday, that fear of contagion, that SVB wouldn't be looked at in a vacuum as a very unique bit of exposure to Silicon Valley and startups that were having problems, but rather an indication of bigger issues with that size financial institution. And so you saw First Republic and other banks really selling off, and depositors say, wait a second, I don't know if my deposits over $250,000 are insured. Why don't I move to one of those great big banks that we know the government will rescue and has in the past. And so today, with this statement, which arguably had far more impact on the markets than what the Treasury Secretary said today, it did help boost stocks and create a bit of a floor there. We'll see if this has actually been an end to the banking crisis. But this is an effort by some of the country's biggest banks, including one of the government's favorite bankers, Jamie Dimon, who our Richard Escobedo reported was at the Treasury Department today speaking to the Treasury Secretary to try to shore up confidence. This is a firewall around the banks saying this is not going to be a broader crisis. The Treasury Secretary also today talked about the concern about credit and credit markets. So they're really trying to contain and ring fence this. We'll see what happens in the markets tomorrow. But this was a tremendous statement to have this deal come together as it did.
First Republic Bank getting the kind of help from other banks that Silicon Valley Bank would have loved to have before the FDIC took it over.
But because of some of those,
Friday.
exactly, but because of some of those very unique problems Silicon Valley Bank had, you saw major investors pulling funds out. They went from $200 billion down to, I think, $40 billion pulled out in a matter of days. So, and then you had the government come in and declare them, unusually so at this size, $200 billion, systemically important enough for the government to step in and save them. And the government today, Treasury Secretary Yellen said, isn't ready to extend that to all other banks. They don't have the authority to do so.
Right. Scott, I want to ask you about something that White House officials have been saying. Any day now, they say they are going to be announcing new banking regulations that they want Congress to pass to prevent something like this from happening again. But you spoke to Republican Senator Chuck Grassley of Iowa about that, and he had a very different view of what's going on. Tell us about that.
Yeah, at this time of uncertainty, Nancy, there was one certainty that there was going to be this battle this week between Democrats and Republicans here over whether this was a failure of regulation or regulators. We asked Senator Grassley, who among other Republicans was supporting a 2018 deregulation of the banking industry, whether that contributed to what we're seeing over the past week. Take a listen to what he had to say. Could any of the regulations pulled back in 2018 averted any of this crisis?
No, just the opposite. The way that the 2018 law was written was to give maximum flexibility to the Fed on what they would require of banks between 50 million and 250 million, and the Fed didn't exercise that flexibility they had.
In a more practical sense, though, Nancy, there's not really a path forward for major legislation on the banking industry in this Congress at this moment in time. And I spoke with the House Majority Leader's office to ask if they're going to expedite their return here to Washington or take this up more promptly as an issue. And they said, no, we'll be back when we're back in the coming days.
And that might be part of the reason that the White House is also saying it's going to talk to regulators and ask them to put new rules in place themselves because they don't need Congress necessarily that approval in order to do it. Margaret, I want to ask you about another big story that we're following, which is TikTok. The company revealed that it's getting pressure from the Biden administration to basically divest TikTok from its Chinese ownership or face a possible ban on U.S. phones. But even if the company were to divest, would that really solve the problem of the U.S. being concerned that users' data is at risk from being looked at by the Chinese?
Well, with all social media companies, we know there's so much data that is collected by them. The unique part about TikTok is that parent company, ByteDance, is based in China. And so that foreign and national security concern is kind of unique to them, although CFIUS has looked at other companies like that have foreign stakes or foreign ownership stakes. This doesn't completely solve the problem. This is a really complicated one. We know the TikTok CEO is going to be before the Senate next week testifying and answering questions. But what the administration did here is basically first endorse that bill from Senator Warner, who was giving them the option of banning without forcing their hand to do so, or to just force a sale in some way or managing of data. It goes beyond what TikTok had been negotiating with the government for the past 2 years. This is a problem we've been talking about for 3 years. Remember, the Trump administration tried to ban it. The Biden administration has picked up some of those efforts, but really gotten caught in how complicated it is, in part because this app is already on hundreds of millions of phones here in the United States. The Commerce Secretary said they'd lose voters under 35 if they tried to do something like this. So they're trying to find a way to not get rid of this app, to allow it to survive without having a foreign entity be able to use and exploit data. And for the United States government, they've come to this conclusion that you cannot separate a Chinese company from a Chinese business, and that ByteDance could be exploited by their government in Beijing to not just collect data, but ultimately to manipulate the news that you receive on your phone. And that's really what's changed in the atmosphere in terms of the Biden administration's calculation, that they are saying the deal they had been negotiating with TikTok over the past 2 years isn't sufficient enough. They have to go a step further. But we'll see what the TikTok CEO can say when he's before Congress next week.
A real sign of how concerned not just the White House, but Congress is about the vulnerabilities posed by Chinese ownership of
it's
TikTok.
Not just cat videos on TikTok. This goes into very serious issues of concern and privacy and manipulation and surveillance by foreign government.
No question. Margaret Brennan, Scott MacFarlane on the Hill, thank you both so much for being with us today.